All right, let's jump right into this. If you're gearing up for the Florida General Contractor Contract Administration exam, I know exactly what you're feeling right now. You're probably staring at this massive, overwhelming stack of like 15-plus reference books, right? You've got your standard AIA contracts, the Florida Building Code, OSHA regulations, the contractor's manual, and you're just sitting there wondering how on earth you are supposed to memorize all of this. Well, in this explainer, we are going to crack the code. Because instead of trying to just memorize scattered, random facts, we're going to treat this exam exactly like a real-world construction project lifecycle. By organizing all this information chronologically, you'll see how everything naturally just clicks right into place.
So, to help dial back that exam anxiety, here's our game plan. We're going to hit estimating in contracts, scheduling in controls, accounting and finance, OSHA safety compliance, and finally wrap up with liens and deadlines.
Kicking things off, we have Phase 1, Estimating and Contracts.
Okay, let's break down the fundamental trade-off we face in estimating. It's always about speed versus accuracy. If you just need a quick preliminary budget, the square foot method is your absolute go-to. It's fast, takes maybe a few minutes to a few hours, but, the catch is that it's only accurate within 20 to 30%. Now, on the complete opposite end of the spectrum, when you are locking in your final hard bid, you have to use the quantity takeoff or QTO method. This is going to give you the highest accuracy, shrinking that margin of error down to just 2 to 5%. But of course, it's going to take you weeks to actually pull it off.
And this right here illustrates the exact concept the exam makers absolutely love to test. Square foot is the fastest but least accurate, while QTO is the most accurate but takes the longest. So, when you're sitting there and you get a question asking which method to use for, say, a feasibility study versus a final contract price, just picture these two opposite extremes on the spectrum and you'll nail it.
Now let's apply some actual math to our estimating. Excavation math is a super high-yield topic for this test, and you absolutely have to know how to calculate soil swell. The formula is loose cubic yards equals bank cubic yards multiplied by 1 plus your expansion factor. So let's say we have 500 in-bank cubic yards of soil, and we're dealing with a 30% swell factor. We just multiply 500 by 1.30. That gives us 650 loose cubic yards. Now, if your haul trucks can carry 10 cubic yards apiece, you just divide 650 by 10, and boom, you need exactly 65 trucks to clear out that site.
Once we have our estimate dialed in, it's time to sign the contract. But I want you to really notice how the risk shifts between you and the owner based purely on the contract type. In a lump sum contract, the owner is carrying very low risk because the price is firm. But as the GC, you are absorbing all the risk of any cost overruns. Now, that's perfectly fine when the scope is crystal clear. But let's contrast that with a cost-plus contract. This is what you want for fast-track or emergency jobs where the exact scope is totally undefined. In this scenario, the risk flips completely. The owner takes on high risk by agreeing to pay all actual costs plus a fee, while your risk as the GC drops incredibly low.
Moving right along into execution, we hit Phase 2, Scheduling and Project Controls.
First up here, we need to talk about schedule slack, which in the construction world we call float. Specifically, total float is defined as the amount of time an activity can slip without delaying the final finish date of your entire project. The golden formula you need to memorize here is late start minus early start. You can also calculate it using late finish minus early finish, and honestly, here's a quick pro tip, both of those methods will give you the exact same correct answer on exam day.
So the absolutely crucial takeaway here is this ironclad rule of critical path method, or CPM scheduling. The critical path outlines the longest sequence of activities in your project. Because of that, activities on the critical path have zero float. I mean zero. They cannot slip by even a single day without pushing back the whole project. So if a test question gives you an activity with a total float that is greater than zero, you can instantly eliminate it. You know for a fact it is not on the critical path.
Now, what happens if you fall behind? Well, you might need to crash the schedule, which basically means throwing more resources at it, like paying overtime or bringing in larger crews to speed things up. But where exactly should you put those resources? Pay close attention to this tip. You must focus your crashing efforts strictly on critical path activities. Shortening a non-critical activity that already has float isn't going to change your project's finish date at all. It's literally just going to burn through your cash for no reason.
Let's shift gears to the money. Phase 3, Accounting and Financial Management.
To really anchor your understanding of the financials, let's look at these two distinct tips from the reference materials. Think of the balance sheet as a snapshot. It shows your exact financial position, your assets, your liabilities, and your equity at one specific point in time, just a freeze frame. On the other hand, the income statement, which you might know as a P&L or profit and loss statement, shows your financial performance over a period of time, like a month or a whole year, calculating your revenue minus your expenses to find your net income. So remember, snapshot versus performance over time. Keep those two concepts totally separated in your mind.
We also have to track our project using a work in progress or WIP schedule. And let's break down a very classic exam trick right here: overbilling versus underbilling. Overbilling means you've actually billed the owner for more work than you've officially earned. Now, this is absolutely fantastic for your day-to-day cash flow, but technically it creates a liability on your balance sheet as unearned revenue. Underbilling is the exact opposite. You've done the hard work, but you haven't billed the client for it yet. Yes, it creates an asset on the books, but listen to me on this one. It is terrible for your actual cash flow.
All right, let's talk site safety. Phase 4, OSHA safety and compliance. I want you to visually burn this massive number into your brain right now. 6. In construction, 6 feet is the ultimate trigger height for fall protection under OSHA Subpart M. Whenever your workers are 6 feet or more above a lower level, you are legally required to provide guardrails, safety nets, or personal fall arrest systems. Don't second guess it. Just remember, 6 feet.
You also absolutely need to know the strict Department of Labor reporting deadlines for when things go wrong on site. Do not mix these up on the test. If there is a worker fatality, you have exactly 8 hours to report it to OSHA. 8 hours. But if the incident involves an inpatient hospitalization, an amputation, or the loss of an eye, the timeline extends just a bit. Fatality is 8 hours, severe injury is 24 hours.
And finally, we enter Phase 5, Florida liens and deadlines.
Let's map out the sequential progression of Florida's lien law under Chapter 713. Guys, this is an incredibly strict timeline. First up, you have exactly 45 days from your first furnishing of labor and materials to serve a notice to owner, or NTO. If you miss that 45-day window, you completely lose your rights. It's gone. Next, you have 90 days from your last furnishing to officially record your claim of lien. And finally, you have exactly 1 year from recording that claim to commence a foreclosure action. 45 days, 90 days, 1 year.
Now, to save you some crucial minutes on exam day, I've put together a rapid-fire cheat sheet of instant recognition triggers. If you see the phrase competent person pop up in an OSHA question, I want you to instantly think has authorization to stop work. If you see first furnishing, you know immediately that's the trigger to start your 45-day NTO clock. And if the exam asks you about the NTO deadline, the absolute key word to look for is received. The notice must actually be received by the 45th day. Putting it in the mail on day 45 doesn't count. Okay, let's wrap this up with a direct challenge right out of the practice exam simulator. Imagine you have a 10,000 square foot lot with an average elevation of 15, and you need to bring it down to an elevation of 10. You subtract 15 from 10, giving you a negative 5 feet, which means a 5-foot cut. You multiply that 10,000 square feet by 5 feet to get 50,000 cubic feet of dirt that has to be removed. But we need cubic yards, right? So to convert that, simply divide your 50,000 by 27. The result? You need to cut exactly 1,851 cubic yards of material. If you can follow that logic, you've just mastered one of the trickiest math concepts on the test. But it really begs the question, if a simple elevation change requires this level of precision, what hidden financial or scheduling traps are lurking unnoticed in your next real-world project? Keep at it, trust the project lifecycle we talked about today, and I'll see you in the next explainer.